Hello, fellow investors, and welcome back to Borex Investing. So, Nebius, ticker NBIS, just reported their Q3 2025 earnings. And while everybody was expecting an update on their 2026 guidance, what we got was actually quite shocking. So, not only did they provide a huge update, but they also announced a new hyperscaler deal as well. So, in this video, I will cover all of that and give my latest opinions on where we are trading at today. All right, so going into the latest earnings call, I have to admit I was feeling a bit cautious. Yesterday, Nebius's main competitor CoreWeave announced their earnings, and while they had a double beat, they actually lowered their revenue and capex guidance, citing delays due to timing and capacity with a third-party data center vendor. And the street did not like that, to put it lightly. And right now, CoreWeave is struggling. Although they had that earnings beat, their stock price took quite the hit due to the lowered guidance. And it's now down to about $90 per share. So remember, this was sitting at $140 only a month ago. But fortunately, Nebius is not CoreWeave. When they announced today, I don't think many expected the numbers to be this good. Right before announcing, we learned that Nebius actually signed another deal with a hyperscaler. So I said in my last video, I thought we were close, and well, it looks like I was right. This time we have a deal with Meta for 3 billion US dollars over 5 years. So that is excellent news there. Then came the numbers where we found out that Nebius actually missed the revenue target because they simply ran out of all of the available capacity. So this is important because they didn't miss revenue because demand weakened, they missed revenue because they physically could not deploy capacity fast enough to meet demand. They were totally sold out. We also learned that we had a beat on adjusted EBITDA, so that was also very good news. But really, those weren't the numbers us investors wanted to see. We wanted to see updated ARR numbers, and wow, did we see them. $7 to $9 billion. Yes, that is the new expected annualized run rate revenue at year end 2026. That is correct. 7 to 9 billion. So let me remind you that this is a company currently sitting on a market cap of about 28 billion. That means that this is currently trading at 3x revenue guidance for 2026. 3x. For high growth tech and software companies, the typical price to sales range in today's market generally falls between 5 and 14x forward revenue. And then Chief Revenue Officer Mark Boroditsky stated more than half of our 7 to 9 billion ARR target by the end of 2026 is already booked, not projected, not modeled, booked. That means Nebius is scaling into contracted revenue. Demand is not the problem, demand is already spoken for. The only constraint now is how fast Nebius can build. And we also heard on the call CEO Arkady Valaj say, we expect more and more mega deals, such as Microsoft and Meta. And that was exactly what we wanted to hear. By the way, we also learned that group revenue grew 355% year over year and 39% quarter over quarter. So to simplify, we are growing. Now, one thing to note though is Nebius will launch an at the market equity program for up to 25 million shares or 10% of the total float. And this will be used to finance its expansion. So I have to say, this was expected. I talked about this before. We knew we would get some type of dilution. So that's fine considering they are guiding for 700% ARR growth. Again, it's just the name of the game when dealing with young, growing companies. But unfortunately, the timing was not clear on this, so we'll have to pay attention to future press releases. I would say the overall reaction has been obviously very positive to this earnings report. Tech analyst Dan Ives praised the massive numbers and demand outlook and commented how it fits perfectly with the AI bull thesis, and I obviously 100% agree with him. All in all, I think it was actually summarized best by CBO Roman Serchin in his X post. We sold all we had, and now we build much more. Absolutely love it. Now, I know what you're thinking. Okay, if the results were good, why is the stock not reacting? I know it's frustrating, trust me. The stock price went up right after the earnings call and then gave up all of those gains shortly after. I strongly believe right now this stock is undervalued. It should be trading double where it is right now. Yes, double after these latest results based on their new ARR figures for 2026. I have very aggressive calls for March 2026, and I have shares that I want to see go up in value as well. But unfortunately, sometimes the market is like this. Currently, the market is risk off. And with the neo clouds, there is a lot of execution risk. With the government shutdown, the AI bubble talk, the Michael Burry shorts, it's not a happy place right now. On the fear and greed index, we're still showing broad market fear. If they released these figures about a month ago when we were pumping, the market reaction would have been far more positive on the price action. It's almost like the market is not really paying attention to any of these earnings reports. These neo clouds right now are all being hit and trading way below their all time highs, even though demand for AI is still as great today as it was a month ago. It's almost getting comical at this point. Nothing has changed, but it's okay. If you're a shareholder in this company, you should be happy. These numbers were excellent. At the end of the day, we are all just investing in companies. And if they are growing and doing well, like Nebius, that will eventually reflect in the stock prices. Short term, stock prices can be very irrational based on fears and macro volatility, but long term, they tend to be based on fundamentals. And Nebius has very solid fundamentals, as we see. Remember, this is still a relatively small market cap with low institutional ownership, but that will change. And when it does and market sentiment improves, your shares will be worth a lot more. So, this sadly is a drawback to owning the high beta names. So, I am part of the crowd that thinks we are heading into a Santa rally soon. And once sentiment shifts, you'll see this name and many others rally hard into the new year. Until then, be patient and know what you own. All right, that's it for now. Please like and subscribe if you found this useful. I'll see you next time, and thanks for watching.